right, all right. Good morning, you magnificent melon heads. Hope you guys are well. Happy Tuesday morning to everybody. Hi, Mom. Hi, Dad. I love you guys. Hope you guys are having an awesome morning. Stocks are up just a little bit this morning. Got a couple of earnings reports both yesterday afternoon and this morning, and expectations were very low. And so we beat expectations just like we saw with the bank earnings. Whose expectations is anybody's guess. I don't know where these expectations came from. How do I get performance targets like this? Where what did we have? We had it was Goldman Sachs. Their earnings came in 48% down year over year, and the headline was that they crushed estimates, down 48% year over year, and those estimates were crushed. So those were some pretty awful estimates. Anyways, we got earnings from IBM, Hasbro, J&J. They were kind of mixed. IBM was down a little bit. J&J posted decent numbers. Hasbro posted decent numbers, but all three gave a warning about something that I've been talking about on this channel for a couple of weeks now, and it's starting to play out right in front of us. Get used to it. We're going to hear a lot more of it. And well, let's take a walk through the indexes while we're here. And by the way, hello, Mish. I have got Mish the Mod is in the house. How you doing today, Mish?
I'm doing great. How are you doing this day?
I am doing fantastic. By the way, hashtag where's Mish? Where are you hanging your hat
I
these days?
I am still in Austin. Be here for another couple days, and then I'm probably gonna head back to the Northeast.
All right, from Austin to the Northeast.
Mhm.
Mish is on the move, coming to a state near you. All right, let's go through the indexes. I have got the Dow is up here right now, looking to open about up 254 or 0.8%. S&P doing a little bit better, up 40 points or 1.05%. And the Nasdaq leading the way, up 135 points or 1.13. So markets are risk on this morning. Why not? We're heading into a recession. Why not go risk on? What's the worst thing that could happen?
You know, they were risk
And
on yesterday until they weren't.
yeah, that's right. We had quite a reversal yesterday. On that news, Apple leaked it or released it somehow through back channels, but word got out that Apple was going to reduce their hiring and their investment spend in 2023. In other words, Apple is going on defense like a lot of the banks are doing, and that seemed like that was the news that made the market switch. And the markets were up big yesterday at the opening bell, again on what I couldn't tell you because the bank earnings were god awful. And then on that Apple news is when everything started to come down. Anyways, looking at commodities right now, it looks like gold is flat, down a couple of bucks. Silver the same, down 12 cents. Silver with that 18 handle still. That is ugly. The rest of the commodities are mixed. Looks like WTI crude down about $2, back below $100. Natural gas 719 down about 28. Not a lot of big moves elsewhere. Grains are all down across the board. We've got wheat, corn, soybeans all down. And that's about all we have for commodities. Let's take a look at the bond market this morning. And it looks like, other than the short dated stuff, we've got yields on the rise. The 1 month is down about 5 basis points. Everything else is up. The 2 year and the 10 year, I was just talking to Mish before we went live. We've got the 10 year at 3.01, the 2 year at 3.17. That's a 16 basis point inversion of the yield curve. That is pretty steep. I don't know what. Do you know what the biggest inversion has been in this last couple of weeks? Is this as big as it's gotten?
No, it had gotten up to 24, I think, at one point.
Okay. Oh wow, so it was way up there. I
Hmm.
didn't even realize it had gotten that big. So
I mean,
quite a substantial inversion.
it's still bad. It's just a little off the top, and that's a lot of that has to do with when was it Brainerd that came out and talked and really kind of talked everybody off the ledge. That's when it uninverted as much, and it's kind of been sitting where it's at, and it's starting to slowly creep up again. And now that we're in the blackout period, they can't come out and try and talk people off the ledge. So I
Yeah,
think we're
they're in
going to find out where it is.
their blackout period, even though last month during their blackout period, they managed to leak to the press that there was a 75 basis point rate hike. So seems
Yeah,
even the phrase blackout, their blackout isn't quite so black, is it? It's more of
not
a
really.
black suggestion. I don't know. It's a soft
Eh,
blackout.
it's a gray out.
It's the gray out. There you go. That's one way to put it.
So some weird news just came out. First off, Alphabet announces that Spotify and YouTube are now partnering. I guess they're going to try and get more merchandise through YouTube. And then secondly, Google is allowing non-gaming apps to use other payment methods. They're
So
looking
Google
at a
is trying to avoid
12%
the
drop.
antitrust.
Yes.
Yeah. So there was Apple Pay had. Didn't you mention yesterday that there was an antitrust case filed against Apple for their Apple Pay
I did.
platform, and now you see Google backing off of their requirement with Google Pay. So they're trying to stay out of antitrust space.
You know, once you go into antitrust, once the lawsuit's filed and you're into antitrust, you don't know where it's going to go. It's you just want to stay out of court for antitrust.
Nobody wins in court except the lawyers.
Nope.
That's right. Back on the bond market issue. By the way, YouTube and Spotify. That's obviously YouTube has a YouTube Music function. Interesting. Like when I'm cutting the grass, I have always found that there's better music on YouTube than on some of the other apps. So I usually actually just put one of my YouTube playlists on, and it tears through the battery on my phone because YouTube uses more battery than Pandora does. So I'm curious what they come up with Spotify, because I found YouTube has pretty decent music, a lot of stuff nobody's ever heard of, and live performances,
Yeah.
that kind of stuff.
Actually, I like Spotify as a music. That's my music provider. So yeah, I have no problem with that. TikTok is also attached to Spotify. So maybe they're trying to emulate that.
Could be. I know YouTube is definitely gunning for TikTok with their YouTube Shorts platform and everything, which I've done a couple of shorts. I'm not crazy about them. They're fun, but they don't move the needle as far as channel growth and things like that go.
I mean,
Anyways,
I have a TikTok channel with about 1,000 people on it, so
okay.
it's out there. Yeah.
I would just add that the inversion in the yield curve back on the bond market has reached the 6-month Treasury. Again, Mish pointed that out. The 6-month is at 3.04 with the 10-year at 2.99 now. So that inversion, that is the approaching recession. It says 6 months out, but I have to remind you that the short-dated stuff is being artificially suppressed by the Federal Reserve, anchored low. So that inversion would probably move even further up the curve if we didn't have those short-dated things being held down by the Fed the way they are. Something we've been talking a lot about lately is the DXY, the dollar index. It's now down to 106.56. We bounced right off of that 108 level, or 108.6. That was getting up there. A lot of people were saying we were approaching a long-term trend, a long-term resistance line. We'll see if this pullback has any legs, or if the dollar milkshake theory is going to continue. But even at 106, this is not good for U.S. multinationals who earn euros or earn Canadian dollars or Japanese yen, because when they convert those overseas earnings back into dollars for their quarterly reports, they end up with fewer dollars than when the dollar was weaker. You're going to see a couple of examples of that today in some of these earnings reports that just came out. Another thing I've been watching pretty closely is this ICE Dutch TTF natural gas futures. This is the European gas price. I put a video out yesterday about how the Russian gas giant named Gazprom has declared force majeure on their delivery contracts to Germany, basically saying, for whatever reason, sanctions or this Canadian turbine, or because Vladimir said so, we can't deliver on our gas that we have already contracted you, and it's out of our control. And this confirms what a lot of people have been afraid of, that the Nord Stream 1 pipeline, which went down on the 11th of July for pre-scheduled maintenance, that it probably will not be coming back online 2 days from now when that window is scheduled to be over. And that's
Do you want to explain what a force majeure is?
force majeure. I'm not sure the linguistics of it, but it basically means like an act of God, something beyond our control. We're unable to meet our contractual requirements due to exigent circumstances. And therefore, all of the clauses about penalties or non-delivery are pretty much null and void. You know,
Right. It's the God contract, right? It means major force, but the you come across something like in Russia, they don't have the turbine, they can't provide the gas, is what they're saying.
Yep.
So that's their force majeure, is that turbine. Once that's cleared, everything else should clear up.
Yeah. So like if your factory gets hit by an asteroid, you know, they let you out of the contract. That's the idea of a force majeure
Mhm.
clause, or in this case, sanctions. So with Russian gas no longer being delivered via the pipeline, a lot of these European gas conglomerates have had to go into the spot market to start buying the gas that they've already sold. Remember, these utilities routinely short natural gas. They sell it to their smaller utility customers, and they sell stuff that hasn't been delivered yet. In other words, they're short natural gas. And so they have to go onto the spot market to source that. And the flow through the Nord Stream 1 pipeline was first cut back on June 14th. And there you go. There's June 14th right there. And you see what spot gas futures have done in Europe since June 14th. And then they ran up pretty much all through late June and early July, right up until here about this, what's that, the 12th of July. That is when Uniper ran out of money. Uniper totally drew down $10 billion worth of credit, including $2 billion from their German state bank KfW. So when they ran out of money, they can no longer buy the spot gas on the spot market. They've actually started burning down some of their winter inventory, which is a very dangerous place to be, because they just don't have the money to go out and buy the gas anymore. So there's bailout talks going on right now. We've been covering that on this channel. They're trying to get loans extended, more credit. The problem is you can't print methane molecules. So if they extend the credit, if there's a bailout, if more money is made available to Uniper to be able to source the gas on the spot market, this curve is just going to get bid up again. Theoretically, it would approach infinity, because no matter how much money you make available to pay the higher price, if no new gas is made available, the price is just going to rise, right? The solution to shortages
Mhm.
is higher prices. So this is going to end. Its prices won't go to infinity because they're going to put the clamp down on demand before that happens. They're going to throttle everybody. They're going to ration energy this winter. That's where this is headed.
They're going to price control soon. I mean, unfortunately, with the way it's going, I really see it happening in Europe. Price controls before it happens over here, and then shortly thereafter, we get price controls.
Well, I mean, rationing is a form of price controls, right?
Hmm.
Well, rationing is demand control, and demand informs price. So if they don't outright say here is a cap on what you can charge, because the thing with price controls, if you just put price controls in place but you don't do anything to curb demand, you go to like instant shortages, right? Because
Right.
higher prices usually causes demand destruction. Well, when they put in rationing, they get the demand destruction without driving the prices higher. It creates black markets and things like that, and all kinds of fraud and other things. But they're already talking about rationing. They're already talking about dialing back thermostats while they're sleeping, dimming street lights on a national level, shutting down industries. So it's ugly. Europe is in for a tough couple of months this winter, to put it mildly. And while we're on that subject, I'll bring you up to this one. EU to soften sanctions on Russian bank to allow the food trade. This is just a couple of hours ago. This one came out. European Union will amend its sanctions on Moscow on Wednesday by allowing the unfreezing of some funds of top Russian banks that may be required to ease bottlenecks in the global trade of food and fertilizers, a draft document showed. Move comes amid criticism from African leaders about the negative impact of the sanctions. So the EU is backing off of the food and the fertilizer sanctions because like there's unrest all over the world. Governments are
Yeah.
starting to fall in Sri Lanka. I mean, you have to feed people. And it's not just the EU. Just saw this one today. US panel rejects duties on fertilizer from Russia, Trinidad, and Tobago. So the US is also backing off of these sanctions on Russian fertilizer. U.S. International Trade Commission revoked hefty anti-dumping and anti-subsidy duties on urea ammonium nitrate fertilizers from Russia, Trinidad, and Tobago on Monday, concluding that these imports did not hurt American producers. But the tariffs definitely did hurt American farmers. So, not a. I mean, is there any way to interpret this other than the West backing down? Is the U.S. and Russia, are we flinching? Is that what I'm looking
I
at here?
think we've not only did we flinch here, well, we had to because of it's not just that the fertilizer didn't get there with the corn. Now we have a drought. Now we have no rain during July to the July 1st to the 14th, which is the major kind of you called it a certain thing,
The
but
silking phase.
the silking phase. If you don't have water during the silking phase, you can lose up to 40% of your yield.
Yep. That's a
Now,
phenomenon called tip back, where you peel the corn and the tip of the corn ear has no kernels on it. It's just bald at the end.
now
That's what happens.
our boy there is in Iran today. Putin
Mr.
traveled
Putin.
to Iran, and he's going to, ostensibly to talk about Syria, but he's really there to talk about food. So food is the big thing today.
Yep. And well, here it is. The US backing off, the EU backing off, and with good reason. This one just came out in Bloomberg. Gas crisis may force fertilizer giant Yara to further cut output. This is something we've been talking about on this channel, how the fertilizer trade is probably going to come back this fall. Once reality sets into the European natural gas situation, it's going to be a total do-over of everything that happened from last fall through the winter and into the spring. We're just going to start from a higher point. European producer highlights the toll of capacity reductions. High gas prices have forced fertilizer makers to curb plants, and that's going to get even worse if Nord Stream 1 doesn't come back online. Europe is preparing people, hey, we're not going to be making fertilizer this winter. And that's going to throw the whole global market out of whack again.
Well, let's talk about Nord Stream 1 for a second. So they're supposed to come back in 2 days. Yep. There is no indication that's going to happen. Secondly, this turbine everyone's talking about will get to Russia no earlier than the 24th.
Well, I think that's when it's going to get to Germany, the 24th.
Okay.
Right, because it's on a ship. They're not
no,
flying.
They decided not to fly it.
Oh, okay. Well, we got our wires crossed then. I thought it was going to Germany on the 24th. Maybe it was Russia.
Yeah. So it got flown over to Germany, and then it's getting over to Germany by the 24th. Well, it's not just like, boom, here's a turbine, let's get going. No, it takes a while to install a turbine. You got to shim it. You've got to connect it electrically, mechanically. You've got to do your testing. That can't be done in a day. The shimming alone is going to take 12 to 18 hours.
Yep. Yeah, it's not like changing batteries. All right. When you're installing a turbine, this is a big piece of equipment with a lot of complex interconnections. It's not, I don't even think a couple of days, to be honest with you. I think this is a lot more involved than most people think. And by the way, I got a lot of comments on my video yesterday about the word turbine because I'm pronouncing it as in the Sikh headwear. I had a lot of people say, no, it's a turbine. It's a turbine. Yes, I get it's spelled turbine, and I get a lot of people say turbine, especially in the aircraft industry. They refer to them as turbine engines.
Mm-hmm.
But you may notice that my fellow nuke, Mish, here is also calling it a turbine because in the power generating industry, it's referred to as a turbine, even though it is spelled turbine. So, no, it's not a mispronunciation when you hear me saying turbine. And no, I am not talking about headwear. I am talking about anything that makes.
You might get smacked in the face if you call it a turbine on the floor.
Well, they're not quite so hostile in the civilian nuclear industry, Mish. Maybe
they are in the military. Yeah.
Strange things happen to men on boats. I don't know.
Yeah, So there's this game called Danger Nut. You ever heard of Danger Nut?
Danger Nut. No, that's a new one.
So you put a nut on a screwdriver and you use air, low pressure air, 100 pounds, to spin it up until it changes tone, and then you throw it at the ground and see where it goes. Hence Danger Nut, because you never know where it's going to go.
Yep. Strange things happen to people on boats, folks. You end up playing Danger Nut. I'm not going to lie. When you said Danger Nut, I was like, where are you going with this, Mish? It's a family show here. All right. One last thing while we were on the fertilizer issue. I saw this one. I've been watching Progressive Farmer, DTN, for a while for updates on fertilizer prices. We did talk about how, the U.S. is backing off, Europe is backing off, and Europe won't be able to make their own fertilizer if the natural gas situation isn't resolved by the winter. Well, somebody forgot to tell fertilizer prices here in the States, because you see this red line here. This is 2022 urea prices, which the entire fertilizer spectrum tends to trade in tandem with each other. So one goes down, they all tend to go down. Excuse me. But you can see here a couple of weeks straight now, really almost 2 months straight, prices have been coming down for urea and most of the other fertilizers. I want to read you this. Most average retail fertilizer prices continue to be less expensive than last month during the first week of July, according to fertilizer sellers surveyed by DTN. This is about a week old, this story. The lower trend has been in place for 6 weeks now. All but one of the 8 major fertilizers were lower compared to last month, with only one fertilizer down substantially, and substantially means 5% or more. So you can see the purple line here. This is your 2020 fertilizer prices. And then 2021, we just had that ridiculous run up in fertilizer prices all through the fall and the winter because the European plants were shut down. We didn't know what was going to happen in the spring. That trend continued somewhat. And then we got a big spike with the invasion of Ukraine. Well, we peaked, looks like right about the beginning of April. We've been ticking down ever since. And then a couple of big step changes down in these last couple of months. So this is the off season. There is a little bit of seasonality going on here, but still prices significantly elevated versus a year ago versus 2 years ago. Are they going to resume their upward trajectory this fall? I don't know. CF Industries, one of the biggest fertilizer companies in the world, was down big today on this news of the backing off of sanctions with the Russians. But we're going to stay on top of this one. Right now, if I had to guess, I would say we're going to get a repeat of this trend from last year, mainly because of the European plants being shut down. But we'll see what happens in the fall.
You want to say hi to Sage?
Oh, we got to say, hey, Sage, how's it going? Sage News Live is in the chat. Good to see you, brother. Sage has been on my case telling me to buy a new microphone. I told Sage when my channel got to 20,000 subscribers, I was going to get a new microphone. So, what do you think,
Oh, and
Sage?
congratulations to Jack, everyone. Jack did go over 20,000 yesterday.
Thank you very much.
That is a very big milestone in the YouTube community.
Thank you to all 20,000 of you, 20,030 something now. That it's been a couple hours since I broke the 20 mark. But thank you guys. It's been a wild ride. It's been a trip, and I'm having fun. We're going to keep doing this for a while. What do you think? Let's talk about housing starts, Mish. We got a big data point today.
Let's talk about housing starts.
This is on the economic calendar. Housing starts in the U.S. dropped 2% month over month to an annualized rate of 1.559 million units in June of 2022, the lowest since September of last year. And this blue bar chart here, this is your monthly housing starts in the U.S. And you can see here is June down here at 1559, the lowest. Well, we tied that low from September. So a big reduction in new home projects, at least single family home projects. Put a pin in that one. We're going to talk about that in a minute. But you can see we had this big build out in housing starts at the end of the year. It rolled through the spring, and then the last couple of months, man, just big reductions in housing starts. Now, this is going to hit second quarter GDP, this reduction in housing starts, and we have another revision to the Atlanta Fed's GDP Now estimate is coming out later today based on that housing start data point. So
now, that's the last update before they actually release it, right?
There's one more update on the 27th, one day before the actual GDP comes out. There's one last update after today. So right now, that's projecting a negative 1.5% second quarter read for the GDP. And I would add that this has been high since the pandemic hit. It has erred to the upside. So if this is saying minus 1.5, it's a good bet it's going to come in well below that. But I would expect after this housing starts number that we're going to get a reduction in this, maybe not a huge reduction, but we're probably going to see something like negative 1.6 come out later today. Probably between noon and 1 p.m. Eastern time is when the GDP Now revision will get released. But you can see here is in this green line here, this is what the GDP Now has done over these last couple of weeks. And well, right now projecting, negative 1.5%. That would put us into a recession. Be 2 consecutive quarters of negative economic growth. We have that revision coming out later today, and then we have one more revision on the 27th, the final nowcast, which will be advanced M3 manufacturing and advanced economic indicators. Those are basically your industrial output and your inventory numbers. Now, the inventory numbers could potentially be a positive influence on GDP because inventory growth actually reads as economic growth. But if we're down well below 1% when that number comes out, it's probably not going to be enough to take us positive. So running out of time, and we're running out of shots on goal to improve these GDP numbers before the actual GDP estimate comes in. And it's the 28th will be when we get the actual number, and that's going to be a crazy week. We have got big tech earnings that week, right? There's like $5 trillion worth of market cap reports earnings in those first couple of days that week. Then we've got the Fed on Tuesday and Wednesday. We got the FOMC meeting on Wednesday, the anticipated 75 basis point rate hike, maybe 100 basis points. And then after that, we get the GDP on that Thursday. So it's going to be a loaded week next week, folks.
Now we're going to be live when J Powell speaks on Wednesday.
That's right. We will be live streaming that as we do every month. Those are usually pretty busy live streams, so get ready, moderators. You guys are going to be drinking from the fire hose on that one.
Miracle Oil said something in chat there, sir.
I see that. Let's bring Miracle Oil's chat up there. Hello, Miracle Oil. Thank you very much for the super chat. He says, JU nailed Netflix earnings last quarter. Any new picks? This one's tough, Miracle Oil. I think Netflix is going to continue to post bad numbers. The thing is, expectations are so low right now. Like with the bank earnings, I did a video a couple of days ago talking about how the bank earnings were going to be just absolutely horrible. And they were absolutely horrible. I mean, all 5, 6 of the big banks were down high double digits year over year in their earnings. And yet all the headlines were about how they crushed estimates. The estimates were crushed. It's like, hey, our earnings were only down 48% year over year. Yay, us.
Yeah.
And their stocks rally on that news. So when expectations are this low, it's really hard to make a stock call. Right. So I can tell you Netflix is probably going to post another bad quarter. You're probably going to see bad subscriber numbers again. But with the expectations so low, the stocks could actually rally on that news. So it's a little dangerous to try to trade around earnings right now when you have so much negativity built in. And I would just mention, keep an eye on the put to call ratio, the fear greed index, right? If you see the put to call ratio getting so high, that means there's so much negativity built up in the markets. That means all that bad news is already priced in. And if you get any kind of rally, all those puts are going to get covered, all that short's going to get covered, and you're going to get a relief rally. So it's hard for me to trade around this earnings season. I have put a lot of time into this, and I've been really racking my brains. I'm trying to come up with a good pick, and the more I study it, the more I'm just thinking, stay out. To be honest with you, not a financial advisor, not financial advice, but I can see a lot of people getting burned on these relief rallies if they're not careful. And the news is so bad that I can't go long these names, so I'm kind of stuck in between.
Essentially, we're creating a pump and dump almost daily. And if you don't hit it right, you're going to lose money.
Or it's almost a dump and pump, right? When you're talking about like shorts building up and then you get a relief rally on those shorts covering, that's a dump and then pump. Like you sell it first and then you get the rally.
Right.
But thank you very much, Miracle Oil. I appreciate that. I could tell you my exposure. I'm still heavily exposed to precious metals. I still have some commodity plays in place. They're not doing well. What else am I in right now? Geez, that's it. I mean, I got my butt kicked this last month and a half. Let's be honest. I've not done well this last month and a half. So
I'm keeping my miners. I have a couple commodities and then my transportation company.
Yeah.
So before we move on here to the next super chat, since we're talking about housing anyway, someone was asking, can this housing bubble continue? Because Redbook just went up again. I don't know if you saw that or not.
I didn't see that Redbook went up. There's a lot of people are saying that. A lot of people are saying housing could keep going up. Now, I personally am not in this camp, but I can tell you the reasoning they're using. By the way, check out a guy, Happy Hawaiian, on Twitter, because he put out a lot of stuff this morning, a lot of comments to the effect of his bullish case for housing, and it's solid. I mean, I'm not quite there with him, but Happy Hawaiian, he's one of those guys when I see him in my Twitter feed, I stop and read every time, and I can count on one hand the number of people I do that with. But he's basically saying, like, you got a lot of people that they're locked into very favorable mortgage conditions. I I think the way he phrased it was a 2.5% mortgage is actually an asset at this point. That, if you've got a mortgage, you refi down at that low rates, that you're not going to do anything. You're not going to sell. You're not going to move. You're going to stay put, and you're going to ride this whole downturn out. And because of that, there's not going to be any new supply coming on the market. And he actually pointed to this housing starts data this morning to say the same thing. The conditions for borrowing are limiting demand, and the conditions in the supply chain are making it so hard to build that there's a natural limitation being placed on supply right now. So even though buyers are drying up as the mortgage rates are pricing them out, you're seeing a commensurate reduction in supply. So there's no net change on the supply demand balance. So these prices are going to stay elevated, possibly even tick up more. And honestly, that's a pretty solid theory right now because that's exactly what we got this morning. Now, the one monkey wrench that could potentially be thrown into that engine, the one thing or the flaw that I see in that theory, and I'm not dinging Happy Hawaiian by any means, he's a really smart guy, is I think that case is underestimating the potential of layoffs. If we get business defaults and if we get widespread layoffs, people lose their jobs, people lose their homes. Right. So that could bring more supply on the market. If people in the millions start getting laid off and stop paying their mortgages, then those houses are going to go up for sale, whether or not those people can afford to buy something else or not. It's not up to them whether their house gets sold because they defaulted on their mortgage. So
Would you
that could
call
bring
that a
more supply.
renting renaissance?
That's pretty good.
Uh,
Yeah. Yeah. Steve, we're going to get to your super chat in a second because Mish just gave me another segue. Um, Now, along those lines, Mish, tell me what you saw. Tell me about that, what you just mentioned
Okay,
there, the
so
renting
what we're seeing
renaissance.
there is the housing starts, yeah, they went down by 2%, but they went down 8% on single family dwellings. So people have stopped building houses and they're moving towards the apartment complexes because multi-family units went up by 13%. So they're calling it the renting renaissance is what we're moving into now. I think the guy that came up with that should get a raise.
Mhm. So here is one chart that illustrates what Mish is talking about. The red line here, that's multifamily permits, apartment buildings, duplexes, townhouses. And then the blue line here, that's your permits for single family home construction. And you can see right here, the tail end of this chart, right? You see single family home permits is dropping pretty significantly here, but you've actually got a trend up in multifamily real estate. That means you're right. The market is preparing for an influx of renters or people downsizing. That's another possibility here. And that kind of fits with the wave of layoffs theory. If you get a lot of people lose their house because they default on their mortgage, they're probably going to end up in a smaller place renting. And this is the market getting ahead of that curve, it looks like. So again, that's the one possible flaw in that theory of supply being limited and therefore the home prices continue rising is that wave of layoffs that I'm afraid is right on the horizon, right? We're already starting to see a slight uptick in initial jobless claims. We haven't seen a move in the unemployment rate yet, but that doesn't mean it's not coming. And here we see again in single family and multifamily starts, you see the blue line, big step change down in single family home starts, even though you've got this uptrend in multifamily. So what was it? The rental nation renaissance? Is that what they called it,
Yes,
Mish?
sir. Yep.
Interesting. All right, let's bring up Steve Woitis' super chat. Thank you, Steve. I appreciate the super chat, sir. The support of the channel. He says, "Will the Fed pivot before the midterms, before the 2024 election?" I am going to say no, they won't. I think the Fed pivot is still a long, long way off. Now, a lot can change. One of the midterms, we got 3 more months before the midterms. A lot can
Let's see,
change.
November. Yeah, 3.5.
3.5 months. A lot can change in 3.5 months. All right. But right now, as it stands, I'm going to say no. We don't see a Fed pivot before midterms. Now, let me define a pivot. A pivot is where we go from tightening to easing, from hiking to lowering. All right. Maybe we see a reduction in the tightening or something like that, right? We're anticipating another 75 basis points this month. maybe the month after, well, there is no August meeting. The next meeting is September. Maybe we get 50
Mhm.
basis points in September. Maybe we get 25, but we're still going to be tightening. All right. Now, that is a direction back towards the center, a movement towards the center of the monetary policy spectrum, but it's not a pivot yet. The pivot happens when you cross zero and go the other direction. And I don't think that happens before the midterms. I think the president would probably like it to happen before the midterms, but right now, all the energy is still on fighting inflation. Now, I think we are going to get a seriously lower inflation print next month. I really do. The commodities have come way down. Now, commodities take time to filter through the supply chain, but look, oil, gas, food commodities, they've been coming down for about 2.5 months straight now. So that's should be filtering its way through. Now we still got a really high PPI last month, so maybe we have one more big CPI number before that filters through. PPI tends to front run CPI, but eventually that lower energy price is going to start reflecting in consumer prices. And those numbers are going to come down. And when those numbers come down, the Fed is going to breathe a sigh of relief and maybe they take their foot off the gas or they take their foot off the brake a little bit. But I still think that is a ways off, certainly not before the midterms. But I do believe the Fed will pivot eventually. There's some people out there who are saying the Fed is not going to pivot at all. I think they still will because the government will be insolvent if the Fed doesn't pivot eventually. They can't afford these rates to stay here that long. But thank you, Steve. I really appreciate the super chat, brother. Appreciate the support of the channel as always. Thank you guys very much. It is 9:51. We've got 9 minutes to go before the markets open. Let's see what we're at right now. Oh no, the markets are open. I'm sorry. Excuse me. Let's see what we have going on here. Not the futures. Get off the futures here. Show me the major indices. All right, we have got the S&P is up 40 points or 1.06%. I'm sorry, did I say the S? Yeah, that's the S&P. Sorry, guys. I am a little slow on the draw this morning. It's the morning. I'm sharp as wet leather in the morning. All right, the Dow is up 266 or 0.8%. Pretty good morning for the Dow. Close you, close you. Where is the Nasdaq? Let me get the Nasdaq up here. Woo! Jack did not bring his A game today.
Jack having a little issues this morning.
Yeah, happens to a lot of guys.
Mhm.
All right, that's the Nasdaq is up 104 or 0.9%, up just a little bit, not a huge amount. But we will keep an eye on that one. Again, look at that big reversal yesterday. I mean, we
That's
started
crazy.
up for the day. That's all on that Apple news. So, all right. I see we have got another super from my man. Who do we have here? That is Troy Rhodes. Hello, Troy. Thank you, sir,
I
for
got a
the super.
visitor.
Hello, Kitty. We got. I think that's the first animal in channel history. We haven't had it. No, we've had chickens. We've had chickens.
Yeah, we've had the chickens.
It's the first four-legged animal. Troy Rhodes says, "What is your opinion on steel?" Okay, steel. I don't like it. I don't like base metals right now. Um, and that all comes back to China. All right, China is this monster growth engine, or at least for the last 30 years, China has been this hungry, hungry hippo of steel and copper and concrete and zinc and all the base metals. Half of the building materials in the world have gone to China for the last 30 years, a full 50%. In some cases, more. That's like an average number. With concrete, it's like 65% of all the concrete in the world was poured in China in the last 20 years. Ridiculous quantities. That is done. China's economy is on the brink of collapse. Um, a hot take. I don't even think the country of China in its current form, the CCP, will survive this decade. I think it's going to be that bad. I really do. I think the country could collapse into smaller parts. That's how bad they have made that bubble, and it's going to wreak havoc with the whole world. All right. We've got banks are starting to fail in China. We've got mortgage people aren't refusing to pay their mortgages in large numbers, so much so that the CCP is clamping down on the information and they're already starting to like offer concessions to these people, which is very out of character for the CCP. That's how afraid they are. So none of that building is going to keep up anymore. They're done. They can't keep building cities that there's nobody to live in, which means 50% of the demand for steel, copper, and concrete is about to go away. That's almost half. So regardless of what happens to energy prices or supply chain difficulties, if 50% of demand goes away, that price is going down. So for that reason, I won't touch base metals right now. I don't like copper, even though they're talking about a copper shortage on CNBC. I don't like zinc. I don't like nickel. I don't like any of the base metals here because to me, they're all China trades, and I wouldn't touch China with a 10-foot pole right now. So that's my opinion on steel. Now, caveat to that, maybe there's some kind of nationwide effort here in the States to bring steel manufacturing back to the US and they offer some kind of financial incentives. That's very possible, but painting with a very broad brush globally, I would not touch the base metals industry with a 10-foot pole because I think it's all coming down to China at this point. Thank you, Troy. I
Yeah,
appreciate the
absolutely.
super chat very much. And I've got my man Mike Binder. Thank you, Mike, very much for the super chat. He says, still suspect on the price action. Everyone is bullish. We could see some nasty drop anytime. Yeah, Mike, I'm in agreement with you. It seems like, and Mish and I were just talking about this before we started the stream. The market is naturally seeking the good news in a sea of bad news, and whatever little bit of good news that there is, that gets pasted into the headline, and the market rallies on that news. And that kind of goes back to what I was saying is when you have so much negativity built into markets and priced into markets that the tiniest little sliver of good news can take you significantly higher and can cause these little relief rallies. And it's really hard to trade in this scenario. So you're right that it does seem like the market is just naturally clinging to whatever silver lining they can find.
Yes.
And yes, I agree. We could see that nasty drop anytime. I think it's long overdue. I think we belong way lower than we are right now, even though we're already down close to, was it like 17, 18% year to date in the S&P. We should be moving lower. I really do think that. And maybe it's the second quarter GDP numbers that finally wake people up when the reality sets in. Yeah, we're in a recession. But even then, they're already preparing this, well, the technical recession or the soft recession, the transitory recession we talked about. Right?
Oh yeah, I've heard growth recession, transitory recession, temporary recession, technical recession, all in the
Yeah,
last 48 hours.
all just making excuses to say, we're not really in a recession, a diet recession. It's the margarine of recessions. No, this is going to be a big recession. We'll be lucky to get out of this mess without a depression. Put it that way.
So China, so Henan province is the one where the bank run started. So now we've got bank runs. Then we had people stop paying their mortgages, and it's about 200,000 households right now. And then the flooding started, and this is all in Henan.
So in that city, I did a video a few weeks ago, Zhengzhou, the city where that protest was in front of the PBOC, which is the Central Bank of China. Right, that's their Fed, and the government sent in their street-clothed goons, and they beat up the protesters and hauled them away. That city is where this mortgage protest started. The bank stole everybody's money. The developers sold them properties that they never finished, and then the developers are going bankrupt and defaulting on their mortgages. And these people are expected to continue paying mortgages on homes that aren't built yet when the bank just stole all their money? Nope. Will you keep paying the bank under those circumstances? Of course not. And it's spread from Zhengzhou to 86 different cities. Is it like 230 of these housing projects representing hundreds of billions of dollars in loans? So the CCP is very scared of this, very scared of this. You know, in the U.S. with the global financial crisis, the magic number was 8%. I'm not sure the math, but I remember 8% was the big number. When non-performing loans reach 8%, bad things happen to the banks on their balance sheets. And, you know, as of last week, Mish and I have been trying to get current data out of China on this mortgage protest. But late last week, the number of people not paying their mortgages was doubling every day, right up until Friday when all the websites went dark because the CCP is clamping down on the information. So at a rate of doubling every day, it won't take long to reach that magic 8% threshold of non-performing loans. We'd already be there if that pace continued over the weekend into today. I don't know if it's continuing or not, but I know the Communist Party has come out and they're pushing for policy change. Oh shit. I think I just lost my internet.
Did you? No, I still got you. You're still with me. Maybe he did. Maybe I'm running the program right now. Is Jack there or no? So looks like Jack is frozen, everybody. So we'll give him a minute to see if we can get him back. Can everybody still hear me? Am I still up? Okay, good. So let's go ahead and talk about China while we're here. You know, a lot of people are talking about the different flooding that's going on there too. Like 104 rivers, you got 3 gorges that are getting full up. So China has a lot of natural problems. Then on top of it, you have the 100-degree weather in India and China. So the Mother Nature is kind of fighting against China right now. And then I saw that England at Heathrow Airport had the highest on record of 104 degrees. So, yeah, China cut them off. So the temperature in England is so high, they're starting to use the natural gas now for the more power, which is why I think they're drawing it down. You look at Portugal, Spain, Italy, France, they all have fires going on all day long, and people do not know how to fight fires like they do here, right? We have natural forest fires all the time here in the United States, but Europe isn't usually inundated with fires like this. So they are doing the best they can over there, and they're just, man, yeah, Nigel, 38 degrees Celsius is no joke. What's that, 104, I think?
This is why it's just so awesome to have a Mish on your channel, because when your internet hiccups and your machine spontaneously reboots, the show goes on. Well done, Mish. Thank you, brother.
No problem. Sorry, we had just finished talking about the ow, don't bite me. They had just finished talking about the nature aspects of Europe and China going on, and someone asked them to send water from China over to the United States. That might actually be the next trade.
China needs water themselves. China, check out a series called China's Reckoning on YouTube. It's a series of 3 or 4 documentaries. They're each about a half hour long. And part 3 or part 4 is all about water. China has major water problems, and I don't think they have it to spare. They're spending huge amounts of money to bring water from their lower regions where it's very swampy to the northern sections where it's a lot of desert. I mean, ridiculous amounts of money. China has population collapse, economic collapse, and water problems. You know, are the three big problems facing China right now. But they don't have it to spare. I missed a couple of super chats along the way. Where is New Engineering's? Is he still showing
up? So New Engineering said, let me scroll up there.
I can't bring it up because it booted me. I'm sorry, New Engineering.
1 ounce of silver to your hoard. Go ahead.
Oh, I see. So his super chat was for exactly the spot price of silver. Thank you, New Engineering. He says 1 ounce of silver to your hoard. Love you guys. Keep stacking. Thank you very much. Am I saying that right, New Engineering? I'm assuming the G is silent, or GNU Engineering.
Yeah. That's how you pronounce it.
But thank you from one silver stacking engineer to another. Appreciate the super chat, sir. And 1881 for silver. That is ridiculously, obscenely low. And I think it's going lower, unfortunately. But hey, if silver wants to go on sale, oblige them and take advantage of it.
Okay,
and is that what Troy Rhodes? Is that what he was saying? You were talking about the water. Maybe China can export some of that water here. China is trying to export the water from their southern regions to their northern regions, and it's not going to go well for them. that series that I mentioned, China's Reckoning. Check that out. There's some eye-opening stuff in that series. Very well done, well put together documentary series, and very timely because that came out about a year and a half ago, right before things started going downhill very fast in China.
Yeah.
So thank you very much. Appreciate the super chat, Troy Rhodes and GNU Engineering. Thank you guys. Appreciate all the support of the channel. You guys are awesome. I got to bring back up my windows. Did I have any stories left? Oh, there were a couple of stories I wanted to talk about briefly. Got to reshare my screen here. I got to redo all my settings because I had technical difficulties. Sorry about that, guys. Mish carried the
Technical
show.
difficulties.
Well done, Mish.
So
All right.
while he's doing that, in Texas, I learned a new a term. It's called seed cattle.
Seed
So
cattle.
ranchers, so ranchers are selling as much cattle as they can and keeping just enough to rebuild their herd because they can't afford to water and feed them.
Yeah, the ranchers. I've been reading since last fall when we were in Denver, where you and I met, Mish, at the
Yep.
at that first Ninja event that we did out in Denver. I met a couple of ranchers. I can't remember their names. They were awesome guys. I had a blast talking to them. They were from Wyoming, and they were former ranchers. They're contractors now, but they were talking about how the herd is just shrinking dramatically, because even though the price of the meat is going up, the cost of producing the cattle is going up, and the packing plants were shut down. There was this bottleneck in the meat packing industry. So the cattle couldn't get processed through the supply chain fast enough. So even though the price of the meat was going up, the price of the cattle was going down, and it was putting a lot of the ranchers out of business. And then you throw on top of that this drought and this increase in feed costs that's happened this year, and cattle ranchers are just getting clobbered. And then even worse overseas, look at what's going on to these guys in the Netherlands, where all of a sudden nitrogen emissions is the flavor of the week from the World Economic Forum. What they're doing to people, man. And I tell you, the expression "bite the hand that feeds you," it applies to farmers. You keep treating these
Yep.
people this way, you keep abusing your farmers, and you're not going to have farmers. And I don't think a guy like Klaus Schwab is going to start a garden and feed himself. I could be underestimating Klaus, but I don't think he does well with dirt under his fingernails. I'm gonna throw that one
I
out.
can't see. I can't see him farming.
No. All right. So here's what I was talking about. I mentioned a couple of earnings estimates today. Here's IBM. Their stock is down about 6.5% pre-market because they released their earnings yesterday afternoon. And let me know if this headline sounds familiar. IBM earnings beat estimates. Again, very low estimates. CEO says tech demand remains strong. But they're putting me behind a paywall now. This wasn't behind a paywall
Yeah.
before.
Well,
But it
have you
was
noticed all the
currency.
paywalls going up?
Yeah, their paywalls are going up all over the place. But it was currency headwinds that caused them to bring in their guidance for the third quarter. Currency headwinds. Here we go. And you see this a lot in the report. They gave two sets of numbers, right? They said their earnings were up 9% from a year ago or 16% adjusted for currency. Like if we just pretend the dollar is the same strength it was last year, our earnings would be up 16%. Well, the dollar isn't the same as it was last year. The dollar is stronger now. So they're reporting on a constant currency basis as if to make themselves look better, but it doesn't change the bottom line. Strong dollar really hurting IBM's earnings. Johnson and Johnson, their stock's up about 1% this morning, $2. But the same thing over at J&J. Let's see if they threw up a paywall while I was having my technical difficulties. Surprising driver of J&J's second quarter earnings beat, and it was a beat, but just mildly. But I want to call your attention. Where the heck was it? And like they changed it. They changed, like they rewrote the article while I was away. Here we go. The New Brunswick, New Jersey-based company said the strengthening U.S. dollar will impact its full-year results, and they lowered their guidance as well. That's two big companies, IBM and J&J, both pulling in their forward guidance because of the strong dollar. And since I'm 0 for 2, let's look at Hasbro. Also, the toy maker up 1.75% this morning, and Hasbro was also saying, where is it?
You go back, it was just there on a paragraph below it where you had it. It said something about the strong dollar.
There we go. Net revenue rose 1% to 1.34 billion in the quarter, but came in below estimates of 1.37 billion, reflecting the hit from the stronger dollar. All right. So that is three companies, three reports, every one of them with some amount of negativity about the strong US dollar hitting their earnings. And that is going to be a tide that all of these companies are going to have to swim against. You're going to see this over and over again. Any US company that does business overseas, the strong dollar is going to take a hit to their earnings and take a hit to their forward guidance. So more of that to come over the ensuing weeks. So that's one more thing to watch out for. Again, I had a couple people were asking about picks for this earnings season, and I had somebody mention Netflix. If I had to guess, I would say Netflix probably posts another bad quarter. But again, I just don't have a feel for the market right now because I accurately predicted that the bank earnings would be abysmal, and they were, and yet the stocks did what they did. So with so much negativity built into it, with expectations so low, it's hard to say which direction that's going to move right now. So I don't have all that many trades in play right now. So I'm back in cash raising mode, and I'm sitting and waiting, and we're going to let this one play out. And man, there's a lot going on next week. You really got to watch next week with the big tech earnings, with the Fed, and then with the GDP numbers. 1, 2, 3. If we get bad news from all three of those, the market's going to leg down big. But if we get any good news from any of those three, the markets may latch on to that
Any
good
good
news and
news?
rocket higher.
Any
So,
good news?
yeah. So it's really a hard call to make right now. Um, but guys, I just want to say thank you so much for watching. I apologize for the technical difficulties. 300 people watching right now. Don't forget, give me a thumbs up on the way out. Also, tomorrow is my Patreon Zoom call. Thank you to my Patreon supporters for everything you guys do for the channel. I will see you on that tomorrow. Link down in the description below if you feel so inclined. Mish, anything you want to add?
No, just remember, wherever you go, there you are.
All right, guys. Thanks for watching. Again, sorry about the technical difficulties. And until next time, live small and dream big.